Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week on the show, we're once again examining the longer-term investment horizon and asking what's next for the space economy. UBS expects the core part of the space economy to grow from just over $400 billion in 2024 to over $1 trillion by 2040. Stronger private sector funding, major advances in satellite tech, strong growth in emerging space economy applications and industries, and, most importantly, significantly lower launch costs will likely be the key catalysts. A broader range of applications in communication and security, as well as activities within the emerging space economy, are set to drive growth over the decades ahead. So, what are those key activities and opportunities? And what are the factors shaping this inflection point for this sector? Well, here to answer those questions and more are two of the co-authors of a recent UBS report on the space economy. Alexander Stiehler, Global Head of Longer-Term Investment Themes in the UBS European CIO, and Analyst in the European Equities Team of the UBS CIO, Ashim Thakur. Alexander, Ashim, welcome. Great to have you back on the show, Alex, and great to welcome you for the first time, Ashim, to the programme. We're talking about the space economy, and we've actually talked about this several times before on this show. We talked about the new space race, we've talked about space tourism, but I don't think we've looked at this area, certainly for a few years now, maybe 2021, 2022. Ashim, maybe I'll throw this to you first of all. Kind of what's happened since then? And my sense from reading this report is that, if anything, expectations are for even faster, even greater growth now than before, but bring us up to speed.
Yeah, absolutely. I think the short answer is we're more constructive now than we were when we wrote the last report, which was 2022, mainly because the story has a lot more operating evidence behind it today. On the sort of core space economy definition we talk about in the report, that was roughly $415 billion in size in 2024, and we expect it to grow above $1 trillion by 2040, with risks today very much skewed to the upside. I think three core things have shifted. So launch is moving much faster than we had assumed. So in 2020, there were barely over 110 launch attempts, whereas that number grew to about 263 in 2024 and 329 last year. Basically, a launch every 26 hours. So statistically, it's pretty likely that probably was one today. Another key shift we observed is that the demand mix is much clearer today. So more recurring services like connectivity and analytics are much more visible, and defense demands have become much more structural rather than cyclical. And finally, we think orbit is increasingly being treated as infrastructure, less so just a place to do one-off missions.
Yeah, and I was going to ask a little bit about all the factors that are supporting these trends, but I think you've kind of sketched a lot of them there. I guess one thing that we should also talk about is the shifting profiles in terms of cost, right? Because the hard costs associated with launches, for example, are also down significantly and maybe at a faster rate than was predicted when we last checked in on this topic, sort of 4 or 5 years ago.
Yeah, absolutely. In our view, launch costs are very much the variable to watch. If you want like a single point of reference, some of the early launches 50, 60 years ago cost more than $100,000 in today's dollar terms per kilogram of payload to orbit. By the 2010s, Falcon 9 launches probably had that down to something like $2,500, and the later Falcon Heavy series probably cut that to something closer to $1,500. I think the WEF put this very nicely where they said pretty much over the course of 20 years, launch costs came down by a factor of 10. And the mechanism here is super attractive because most of a rocket's weight is fuel, but the cost is almost entirely hardware. So if you can recover and refly that hardware, launch becomes much more attractive in terms of costs. I mean, imagine if an airline had to throw away an airplane after every transatlantic flight, right? Costs would probably be much higher. And that's pretty much what had been the case for space for a long time. That really started changing about a decade ago when, for the first time, for the Falcon 9 rockets, the first stage, which is like the bottom part or the main part of a rocket, was able to be relanded in Cape Canaveral And by today, it's not even just one company anymore that can do that. Blue Origin recovered its first New Glenn booster, which is funnily enough called Never Tell Me the Odds, which I believe is a Han Solo reference, just last year. And so this is the clear trend we're observing, and we expect more and more reusability. And he just referenced, I believe this weekend, that same New Glenn booster is actually meant to launch again from Cape Canaveral if everything goes to plan.
Let's talk about some of the other sort of foundations, if you like, of the wider space economy. When we've discussed this previously on the programme, it's been very clear that communications and communications tech was very much the main pillar, the key driver. Is that still the case?
Absolutely. Communications is still the main commercial pillar, we'd say. But it's quite a bit of a different communications market than what we probably would have talked about 4 to 5 years ago. On the definitions we use in the reports, satellite services were about $108 billion in size in 2024, and we expect them to grow as a whole over the next 10 to 15 years. But within that component, the mix is changing quite a bit and has already been changing quite a bit. So the consumer part, the consumer services part of that, was close to $100 billion in 2021 and actually down to about 85 in 2024. And that's mainly because that contains legacy satellite TV, which is notably declining. But some of the other components, like enterprise services, went the other way. They grew from $17 billion in 2021 to about 20 in 2024. So here, clearly, there's a shift away from one-way television towards things like broadband and business connectivity and these more advanced applications. And I think there are very practical examples. One I'd mention is direct-to-cell, where there have been rollouts of these satellite services more commercially over the course of last year. And now it's actually more and more likely that if you go on a hike or you take like a longer ferry or something along those lines, that you interact with a satellite network if you're using your mobile phone today. And that's genuinely a very recent change over the past 12 to 18 months.
Well, Alexander, let me bring you in here because I wanted to ask you a little bit about another, really compelling area that I think this report covers in good detail, which is this increasing militarization of space and the space economy. And look, this follows, I guess, similar narratives we see about exploitation of scarce Earth-based resources, whether they're deep ocean or polar. Could you just tell us, where are we at in terms of the space economy? Where are we at in this journey at the moment?
Yeah, that may become a topic in the future, but for now, our investment focus is more on tangible drivers that are likely to support demand over the next few years. When it comes to space military investments, we considered less about a new extraction frontier and more about critical infrastructure that modern economies already rely on, and that is becoming increasingly strategically contested, especially in communications, timing, imagery, and defense-related applications. For instance, from military side, we are seeing increasing investments in space assets that support military capabilities on Earth. Defense is already a significant end market for space, and we expect the segment to continue growing in the future. The events of recent years, especially the war in Ukraine and the recent conflict in the Middle East, have demonstrated, for instance, how crucial investments in modern air defense are for the security of nations to better protect them. So demand for solutions to counter missiles, fighter jets, and drones continues to rise. However, this trend is not limited to land application, it is also extending into space as well. For instance, missile warning capabilities, but also satellite communications play a critical role in modern warfare, as do satellite images that can reveal the movements of the opposing forces, to name just a few examples. A good example on which the US is working is the Golden Dome program. Maybe you already have heard about it. The US is aiming to build a missile defense shield using sensors and interceptors capable of detecting, tracking, and help defeat incoming threats. In addition to land-based interceptors, the system will also rely on space-based sensors and in the future space-based interceptors. The Golden Dome relies on a large network of satellites in low and medium Earth orbit and geostationary satellites for real-time tracking. But maybe a more general comment, you can see that the architecture is overall evolving. The older model relied on a small number of highly sophisticated and expensive satellites. The newer model is based on proliferated low Earth orbit constellations with many more nodes, greater redundancy, and much faster replenishment.
Is there a sense that there's an opportunity here that's broader in terms of, I guess, space security more generally, Alexander? What does that opportunity look like? And again, has the character, the nature of that opportunity shifted just quickly, even in the last, 5 years or so?
Yeah, from military perspective, space investment will benefit from higher NATO spending. The United States established the US Space Force as an independent military unit in December 2019 already, a reflection of how important space had become to national security. But also in Europe, many things have happened in the meantime. For example, in September last year, Germany announced commitment to invest 35 billion euro in military space defense assets through 2030 and published its space safety and security strategy in November last year. And the aim of this strategy is to ensure that Germany is capable to act in space, both in the civilian sector and also from defense perspective. Also last November, so you see a lot happened last year here in Europe, the European Space Agency approved a new 3-year spending plan, which is 30% higher than the previous budget. This plan also includes funding related to the security and defense. Looking at the investment opportunities, some of the traditional defense firms already have meaningful sales exposure to space. At the same time, there's also a range of startups and defense tech firms active in this area.
It's fascinating, and we've got communications, which we've talked about, defence, which we've talked about, which are clearly the sort of biggest players in this space. But there are, in the sort of emerging layer, smaller but no less compelling areas to interrogate. Ashim, maybe if we come back to you, tell us why it's worth paying close heed to this emerging layer, if you like. What do you find most interesting? One that jumps out at me is this idea of space data centres. Tell us a little bit about some of these emerging areas that are also of interest.
I think overall the emerging layer is very obviously fascinating, and it's much more than one market. It's really be described as a set of options within the space markets working on very different time horizons. In our report, we talk about things like private astronaut missions, commercial stations, manufacturing in space, space-based solar power, and, as you pointed out, data centers in space, which sounds incredibly exciting. I think more short-term, I'd want to talk about the things that are more likely to actually become a reality. So commercial stations in LEO, in low Earth orbits, are probably a good example here. NASA currently plans to operate their International Space Station through about 2030, with the idea that there will be successes before that is brought down. And so humanity really hasn't vacated low Earth orbits, I believe, for a single day, more or less this century. So we had, I believe, 25 years of continuous human presence in that space stations, and that's what we're looking to preserve. I believe Ashim announced in 2024 that an independent space platform could come as early as in a couple of years. Other firms are talking about similar ideas for the next couple of years in collaboration with NASA. And I believe that might be the first sort of real movement we see in the emerging layer. On data centers in space, they're incredibly exciting. I think more short-term, the right framing is the way we put in the report is physics very clearly favor space, but at least today, the economics do not, at least not yet. So we believe the near-term case isn't necessarily moving Earth-based cloud into orbit. The next steps are more likely to be that we could process data that is created in space, so things like imagery or telemetry, in space directly so that a satellite can process it there and then send home the processed data rather than the fully raw images or data. On the more exciting parts around data centers in space, so I believe StarCloud put one of NVIDIA's H100s into orbit at the end of last year, which sounds exciting. And Google has a research program called Project Suncatcher, which would actually aim to develop space-based AI data centers. So generally putting AI chips, I suppose in their case, Google's TPUs, in low Earth orbits With, of course, the background being that the idea is in space you have basically permanent, high-efficiency solar power you could use for computation. So we believe that is not likely to be a near-term reality, but it is a very exciting part of the space economy and something we treat more so as optionality rather than something that would be rolled out shorter term.
I wanted to quickly get a sense from you about the role that's played or not played by sustainability in this space. It's interesting because it's sometimes a somewhat tricky narrative, even just in terms of Earth-based resources, before we find ourselves looking upward and outward. To what extent is this part of the conversation when it comes to the space economy?
Yeah, I agree. I think it's very clearly a tricky narrative. And here, thankfully, we had our colleague, Katharina Campidelli, who is our sustainable investing analyst, who really helped us with that part of the report. Her starting point is essentially that sustainability in space is very much two things at once. It's the longer-term viability of orbital environment itself, but it's also what space technology contributes to more sustainable developments right here on Earth. So on that latter part, that's likely a bit more tangible. You have things like Earth observation and satellite imagery, which are really central to things like modeling climate risk or environmental risk. And that satellite connectivity can extend to much broader applications like even healthcare or, I suppose, education. So in her framing, space infrastructure there is a real late enabler of some of the UN Sustainable Development Goals. But clearly, some of these advances come with other challenges. So in terms of space applications, there are very real regulatory gaps, certainly in terms of orbital congestion. There's no real global comprehensive legal framework yet for important things like removal of debris or extraction of resources. And in a recent ESA, which is the European Space Agency report, they tracked something like 40,000 objects in orbit. And they said that there were well over 1.2 million pieces above a centimeter in length just scattered around orbit. And compliance in terms of their framework is very much inadequate the way they view it, with only about half of satellites and something like 85% of the actually used stages of rockets meeting their disposal guidelines. Then there are some smaller considerations. So on rocket emissions, today they're really small. Growth or substantial growth in the space economy clearly could worsen the accumulation of black carbon and things like ozone depletion and pollution. I guess the long and short of it would be that sustainability is a real thing to think about in terms of the space economy, but there are at very least two major factors to consider.
Well, yeah, and perhaps just as a final thought, we always like to bring this very much back to what this means for investors, what investors should be keeping front of mind. Let's just touch upon, I guess, the risk profile in this space. What are the primary investment risks as you see it? And I wonder to what extent those have changed just, in the last kind of 5-6 years or so. And what does that mean for investors, who maybe are keen on this area, but want to ensure they're mitigating risk and making the best strategic decisions? Tell us a bit about the risk profile and what investors need to keep front of mind.
So yes, absolutely. Space very clearly is a risky theme, and there are certainly a few layers to think about. So one thing that's more space specific is execution risk, where the reality is that launches fail. They have failed. They will fail in the future. Schedules for launches will slip. And some of these technical problems could very easily push back the commercialization for a product by months or maybe even years. So that's a very real consideration that we need to have for space that may not be anywhere near as important to other themes. Secondly, I would say congestion and regulation are very real risks here. So the debris point we touched on, again, the European Space Agency tracking over 40,000 objects in space and compliance to their regulation just being very, very incomplete at best, is probably not a minor footnote. We believe it does sit inside the economics of space, and that is a real risk to watch. On a more company-specific side, funding and cash generation risk is very real. A lot of the more pure-play space companies are very capital-intensive, and they have needed and will likely continue to need external funding to finance things like launches or technological advancements. And finally, in space, there is substantial concentration of demand. Some segments depend very heavily on government budgets, or at least on a very narrow set of more commercial customers. The reason we stay a bit more measured on especially the more exciting themes like space-based solar power and data centers in space is that even if those technical milestones are achieved, they don't automatically create profitable markets. So that should be very much front of mind for investors.
Ashim, Thakur, and before that, Alex Stiehler, bringing us to the end of this edition of The Bulletin with UBS here on Monocle Radio. You can listen again and find out more at monocle.com or head to ubs.com now to find out how UBS can help you. This is The Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.